Hi everyone, Maria Tyler here for another tutorial video. In this video we're going to focus on step 5 of your assignment for our unit. So a bit of background information, make sure that you do read the assignment information carefully and we'll go and do that now. There is an example and that's what I'm going to work through in this video with you. Now it is a little bit tedious because I am doing the assignment step by step for you. So that you can follow along and see how I figure out if I go wrong, where I go wrong, how I fix that sort of thing, and what I'm doing. And because I've created this example, I've also created a template, an associated Excel file template for you. So we'd like you to use this template for step 5. It is on the Moodle site, so please download that and save it somewhere to your computer and then utilize that file when you're completing your own trial balance for step 5. Now the key concepts that we are looking at with completing this task is that you understand what a chart of accounts is, okay, because your companies have their own unique chart of accounts, and hopefully this builds on your knowledge from step 4. You also need to understand the purpose of the trial balance in the recording process, and again that was covered in the weekly lectures. Also you have to understand the closing process of double entry bookkeeping. Now the closing process was covered in detail in week 4. So over week 3 and week 4, well really over the 3 weeks that we cover double entry bookkeeping, you've got the underlying knowledge of the whole recording bookkeeping process and accounting, and particularly the closing process. So knowing what are permanent accounts and temporary accounts is very important to the closing process, because remember we only close off temporary accounts and that's our revenues and expenses, and knowing where those accounts get closed off to will help you to balance your final trial balance. So if you don't understand the closing process, you won't be able to balance your trial balance. So essentially this task asks you to reverse engineer a trial balance from your firm's financial statements. So the general purpose financial statements that your firm has prepared, and we're asking you to prepare the trial balance that your firm would have prepared prior to its closing entries. And you will be able to do that if you understand the process or the concepts that we've been covering over the lecture content in the weeks 2 to 4. So let's go to the assignment. So it's worth 6 marks and it involves you creating a trial balance in a spreadsheet using that template, using your own company's financial statements, okay? So it's testing your understanding of this double entry bookkeeping process. So you can find the template that we're going to be using in Moodle. So make sure that you click on the template, save it somewhere to your computer and use that template, please. Now remember, a trial balance is one form of control used for the double entry recording process. So basically it trials your balances, you know, so it sees if your debits match your credits. So a trial balance is simply a listing of the chart of accounts of your firm in terms of debits and credits, literally. It's a trial of whether these balance, so whether the balances between debits and credits match, hence the name, a trial balance. So it's also a convenient list of a firm's ledger balances that can be used to develop a firm's financial statements. Okay, so you can prepare trial balances at different points in the recording process. So I normally use a train analogy, and I draw the engine of the train as starting the process with your transactions, moving to the first carriage. We classify those transactions into journals. Then we move along and we post those journals to ledgers, and then we prepare an unadjusted trial balance at that point. Then we do adjusting entries. Then we do, on the next carriage, we do an adjusted trial balance. Then we do closing entries, then we do a post-closing trial balance, and then we get to the final carriage, which is our financial statement. So the whole train is a process. That's my analogy, the train analogy. Now, we're not getting you to do trial balances at each of those stages. We're just getting you to do the last one, okay? We're getting you to do a trial balance before you would have completed the closing process. So we don't do the post-closing trial balance, we do a pre-closing trial balance, which means you have to include your revenues and expenses accounts, okay? Once you've closed those accounts, then they don't exist anymore because they've been reset for the next period. So Your trial balance must include your assets, liabilities, equity, revenue and expense items, including your comprehensive income items. Now, those revenue and expense items and comprehensive income items, they are our temporary accounts. And if you were to prepare a post-closing trial balance, you would only have assets, liabilities and equity, because we would have closed those temporary accounts into equity, okay, into items of equity. And we'll see how we do that when we reverse engineer it back. So we will be looking at the trial balance in reverse, okay? So in this step, you'll create your firm's trial balance using your firm's financial statements. And the two main financial statements you'll be using to complete this trial balance are your income statements, if your company splits it into two, like Wesfarmers does. Some companies, remember, will just keep both of the statements as one. They'll have your revenue and expenses, and then you'll have the comprehensive income underneath, and they'll just call that the one statement, the one income statement. Wesfarmers splits that income statement into two statements. So I actually have three main statements. I have my income statement, my comprehensive income statement, because I do them separately, and then my balance sheet as well. Now, you also, it says you may need to refer to this. I would say you most definitely will need to if you've got comprehensive income items. Which is most firms, and you can also use this to check where they've closed your profit off to. Okay, so I would say you will need to refer to your statement of changes in equity when checking that the profit or loss and your comprehensive income items is allocated to which equity section, and to check that that figure also matches your profit figure from your income statement. Okay, and I'll show you how to do that. So you need to use the statement of cash flows for this step. We don't look at the statement of cash flows until later on this term. So you can ignore the statement of cash flows for now. So I like to print the physical documents. Okay, so I've literally printed my statement of changes in equity, my balance sheet, and because my firm, Wesfarmers, has two income statements, I've printed both of those two. So my income statement and my statement of comprehensive income. Now, if your firm only includes them as one statement, you just need to print that one statement. So it will say something like income statement or comprehensive income statement, and it will include the whole lot. Or it might say statement of profit and loss and other comprehensive income, and it will include the whole lot. So regardless of how your company presents their income statements as either one or two, you need them both, okay, or you need the full complete one. So you will be entering this one, you will be entering the balance sheet, you won't be entering the statement of changes in equity, but you will be referring to it to see where your profit is closed off to, which item of equity your profit is closed off to, and where your comprehensive income items are closed off to. So you will refer to your statement of changes in equity. Now, you can do it all electronically, you don't have to print them. I'm just a little bit manual and like to tick and flick. So if you're a bit like me, you might like to print your statements as well. Okay, now open your firm's trial balance worksheet, that's the template, and click on the trial balance tab. So wherever you saved it, so I've saved it here, so I'm going to open it up and click on the trial balance tab. Should automatically open up to that tab, okay? You'll find in this worksheet that there's some space for you to enter your firm's trial balance. Carefully enter the accounts from the most recent year of your company's financial statements. Okay, now we ask you to do it from the most recent year, but it doesn't really matter, because either if you should be able to prepare a trial balance for any year that you've got financial statements for your company. So if you feel like you really don't like the financial statements of the most recent year for your company, then that's fine. Use another year. We don't really care. Okay, what we do care is that you can complete or reverse engineer a trial balance for your firm. Okay, so choose 1 year. We ask you just to do the most recent year just because we like to use current accounts. So in this particular example, I'm doing it in 2020, in the middle of 2020. We're almost finished the 2020 financial year, but Wesfarmers hasn't released the 2020 financial report yet because we haven't finished the 2020 year. So my most recent report for Wesfarmers is the 2019 annual report. Okay, so I'm literally going to use the 2019 Wesfarmers annual report. Now, like I said, you don't have to use the most recent one, but we'd like you to. if you feel like you need to use the 2018 or the 2016 or an older one, as long as you can complete the trial balance properly, that's all you need to demonstrate. Okay, so we want you to enter the amounts for the most recent year for the income statements and balance sheets under the debits and credits columns. Now you'll notice in this spreadsheet, have a look, you'll see there are 3 sets of columns. Okay, so we have the first column is for the actual chart of account, so the account in your firm that your firm has. Then we have, this is your trial balance, this is what we mainly mark off, and this is your underlying inputs here. So we have 2 columns for the income statement and 2 columns for the balance sheet. So when we're entering the balance sheet, we will enter them in these 2 columns. When we enter the income statements, we will enter them in these 2 columns. But once we get to the trial balance column, we want it linked. Okay, we want this little section to be fully linked. So, whilst it says enter them under the debit or credit columns, just be aware there are 2 sets of columns that we want you to do. Okay, so do this for the most recent year only. We only need you to do the trial balance for 1 year. Enter your trial balance accounts in the order of assets, liabilities, and equity, and then revenues and expenses, and other comprehensive income underneath those if your company has other comprehensive income. Not all companies do. Okay, a lot of companies will have comprehensive income, but not all of them. So if you have other comprehensive income, it goes underneath the expenses. Once you have successfully completed your trial balance, your debits and credit column total figures should be the same, i.e. they should balance. So again, in your spreadsheets when we're marking, your balance sheet, 2 columns, debits and credits must balance. That's why it's called a balance sheet, because the debits balance with the credits. The accounting equation balances. Assets equals liabilities plus equity, or assets minus liabilities equals equity. Either way, debits must balance to credit. So your balance sheet totals must balance. Your income statement totals will not balance because there is a difference between credits and debits. Hopefully it's a credit, which means you made a profit. But sometimes there's a loss, which means your debits are greater. So your income statement columns won't balance unless your company has made exactly 0 profit or loss, i.e. they've broken even. So your income statement columns won't balance. So when we are linking to all of these 4 columns, you can see already that these 2 columns won't balance and will be out by the profit or loss amount. Now we have to close off that profit, we'll reverse the closing off process because we will be double counting that profit or loss by including our revenues and expenses and comprehensive income items again. And I'll show you how to do that so that these 2 columns eventually do balance. And when we get these to balance, that's how we demonstrate to our markers that we've understood the closing process. Right. Okay, so a couple tips. Your firm's financial statements may be called a range of different names. So remember, some firms don't call it a balance sheet, they'll call it statement of financial position. And again, some firms don't call it income statement, they call it statement of financial performance, or they call it other names. Generally, it should reflect what the statement is about. And make sure that we use the consolidated or group accounts, not the parent or company accounts, all right? Sit back. So after you complete the spreadsheet, there is a written component, okay? Sit back and reflect on what you've just done. Discuss with others, all right, through the various forums, what you've learned by doing a trial balance. Discuss how your firm's financial statements link together. So again, you'll note that we're actually looking for detail in the statement of changes in equity where profit has been closed off to. Now remember, the statement of changes in equity explains the equity items in our balance sheet. That's the glorified section of this little equity section in the balance sheet. But it also shows the detail of where the profit or the loss and the other items of comprehensive income from your income statements has been closed off to in equity. So they all interrelate and they all interlink, and we want you to show us your understanding of how they interrelate and link together. So in your Word document, make sure you include your reflections and comments about the insights that you gained or did not gain from discussing with others as well. So there is a written component to this step. It's not just practical. Okay, so please allow up to 5 hours to complete this step. It won't take us 5 hours today, so don't fret. So let's get going. Now I'm going to show you the electronic, so I'll start with my assets because the The actual assignment has asked us to do them in the order of assets, liabilities and equity. So I'm literally going to start with my assets. So I'm going to go to my balance sheet. Okay, so my firm's balance sheet. So this is what I'm going to be starting with. And I'm literally going to be using the most recent year, which for me is the 2019 year. And I'm going to enter them in millions of dollars. So first of all, let's just go and customize my worksheet. Okay, put your company's name in. I will call that, oh yeah, no, just leave it as worksheet. Otherwise you could call it trial balance for the period ended 30 June, and mine's actually 2019. Put in whatever year you've used, whatever the most recent year is. If you're watching this video in subsequent terms, you might have the 2020 financial statements, 2021 financials, 2022 financials, and so forth. Whatever the most recent year is for your company, just use those statements, okay? All right. Now, you'll notice there are already preset assets, liabilities, equity, revenue, expenses, and other comprehensive income headings here. And Martin's put a couple notes as well. Just adjust the number. So if you have more or less assets, Wesfarmers has way more assets than just here. So I'm actually going to have to insert lines. So just right click. I'm just going to highlight a few lines. Right click and then insert. And that'll just give you a few more. And you can always delete them if you've put too many in. And now's the tedious process. So remember, I'm using these two columns. So I'm going to enter my assets into these two columns. So we don't need the headings of current and non-current, and we don't need totals. So big mistake that students often do is accidentally including totals in their trial balance. We do not include headings. We do not include totals. Okay, the only headings that should be in your trial balance are these that we've put in there, the assets, liabilities, and so forth. So don't worry about entering current assets or putting a total in. All we want is the actual items. These are the chart of accounts, our ledger accounts. They're the only items we want to put in. All right, so I'm literally going to start. I'm going to see if this will let me copy it. It might not, but let's see. Let's enter those in. Oh, it does. Let's take off the bolding and just quickly go and take off the note numbers. That's easy. So if your company lets you copy and paste like Wesfarmers did for me, you can just copy and paste. Double click to, oh, we don't want to do that. Let's just make it a little bit wider. Okay, now in my, actually let's not make it a bit wider because it doesn't fit on my screen well. Now we have to go and have a look at our assets. Now, Martin's made us memorize three things. So we know that assets are debits. They have a normal debit nature. And I'm having a look to make sure there's no negative or bracketed figures, because that would mean it would be a negative asset, which would be a credit. But in this case, Wesfarmers looks like, this is all their assets, right? Looks like they have all positive assets. So all of those assets will go in the debit column for me. So I'm going to start 79510274246. And this is where I like to use my manual printouts because I can just zoom them in. Make sure you're entering them on the right column and in the balance sheet under the debit column. Okay, so sorry, the right row. So I'm going to start here. So cash equivalents was $795. Okay, so that's my current assets entered. Now I'm going to go and do my non-current assets. I'm going to see if it'll let me copy and paste this. If it doesn't, you're going to have to type out everyone. But that's good because remember, it's forcing you to look at the items on your financial statements. Put them straight underneath. It doesn't matter. We don't need the difference between current and non-current. Some students actually have some items that are the same item, just split into current and non-current. So notice mine has two lots of derivatives. So there's derivatives and other up here, and then there's derivatives and other up here. If you want to leave them like that, that's fine. You can leave them. Some students think that looks ugly and they like to consolidate them into one line. That's also fine. I don't mind whichever way you want to do it. So you're just showing one derivatives. That's fine. We don't mind. Just make sure you get your figures right. In my case, I'm just going to leave them. Okay, so I know this is my current assets. These are my non-current assets. So I'm going to start entering my non-current assets. So from investments, so from the 3393, I'm going to start entering them in. And now, because I enter these so fast, I could have made a typo. So a nice check that you can do is to highlight all of these items. And Excel down the bottom here might be slightly off screen. I'll see if I can just lift that up a bit. Here. Excel does this little auto sum for you, or you can just quickly do a little auto sum, highlight the little items and click on the auto sum button, and it will tell you the sum of these total assets is 18,333, and you can just go and check that that really does match your company's total assets, and if it does, you can be pretty certain you've entered them correctly. Okay, so I don't need that there. I don't want to enter totals in. That was just a little check that I'm doing to make sure that I'm not being dyslexic or accidentally transcribing the figures as I'm putting them in. Okay, all right, so that's my assets entered. That's all of Wesfarmers' assets for the most recent year. I'm going to go and do their liabilities. This is the nice easy part. So again, don't need headings and don't need totals. So I'm just going to copy and paste those. Oh, how good is that? Just let's get rid of that one line. Put those in. I'll probably need a few more lines in here. Insert and then Control Y repeats the last action for me. Make it a bit pretty, get rid of the notes numbers that are copied for me. I'm happy to just manually get rid of those because it saved me all the time typing it. Okay, so now liabilities, because Martin's made us memorise 3 things, we know liabilities are credits. So let me check that all of Wesfarmers' liabilities are positively entered, which means that they are credits. So they're positive liabilities, which means they're credits. So really get to know your firm's financials is what I'm saying. So they are. There's no negative liabilities, which would indicate they're a debit. So all of these are going to go in their credit column. So I'll start with the 3620. So in the, make sure I'm entering in the right, so this is my credit column, so I'm going to be entering here. So 3620. Okay, so that's my current liabilities. Let's go and do my non-current liabilities. Now I've only got 4 of those. And again, you'll notice that there's a couple of overlaps between current and non-current. So you could consolidate them. So again, I've got, actually they're all overlaps. Look, I've got interest-bearing loans up here, provisions, derivatives, and so I could actually consolidate these and just type in here equals the 356 plus the 2673 if I wanted to, and just make it one line item. I'm not going to do that. I'm just going to literally keep them as is. So 2673, 381. Let's enter them all in as credits. 2673, 381, 1 and 91. Okay, so again, I'm going to check that I've entered all of my liabilities correctly. The sum tells me it should come to 8362, or you can just auto sum it. 8362 tells me here. Just quickly check that. 8362 does. So my total liabilities figure is right. I'm pretty confident I've entered them correctly. Get rid of that total because I don't want totals left in my trial balance. Get rid of all the excess lines. Okay, now my items of equity. So Wesfarmers is nice. Oops, sorry, typing it in. Let's go to my balance sheet again. Okay, so items of equity. See if I can just scroll it so you can see my equity before it flicks to the next page. All right, don't need headings. I just want to put my equity items in. All right, so issued capital, reserve shares, retained earnings, and reserves. Now notice they've got accumulated losses in brackets. So if your firm has made losses in any year, or if it makes consistent losses, that will be negative. So that's a negative equity item. That should be in the debit column. If your firm has made profits, it'll probably be called retained earnings, and it'll be positive, which means it's a credit. So equity, again, because Martin's made us memorize things, we know equity is credit, so it has a credit nature. So if it's entered as a positive here, it should be a credit item. If it's entered as a negative or bracketed amount, it will be debit. So I can see actually for this year, so this is unusual. Most of the years Wesfarmers actually has positive figures. Like you can see the previous year they had positive, 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 and then a negative only for the reserve share figure. So all of these figures here were credits and this one was a debit. However, this most current year, it's changed. So they've got actually 3 items which are debits and 1 item which is a credit. Okay, so I'm just going to make sure that I enter them correctly. So I need I need to enter them. So this one as a credit and these 3 items as a debit. So let me copy and paste these words first. Now we're going to come back to equity at the end when we balance the trial balance. And so I'm still here, so I'm going to enter this item here as a credit, and then these 3 items as debits. We don't put negatives in our trial balance. We shouldn't have negatives anywhere. It's either a credit or a debit. There are no negative debits because then it should be in the credit column, and there are no negative credits because then it should be in the debit column. So if I see a negative in your trial balance, it'll be marked down. Okay, so we don't enter negatives into our trial balance. We just make sure we're understanding whether it's a debit or a credit, and we're showing that. Now again, just to check that we've entered this correctly, I'm going to do a little sum, and it's just going to be equals this minus these 3. Oops. Okay, so 9971 is my total. Let's have a look. It is 9971. So I'm reasonably confident I've entered my balance sheet items correctly. So that's my balance sheet done under the 2 balance sheet debit and credit columns. Now we can just go right down to the bottom in the total and do a sum. So equals sum from, what's the top cell here? From G8. So from cell G8 to cell G64. Okay, and we can drag that formula across. Actually, we can drag it across the whole lot and make it a bit pretty. Get rid of the decimals. We don't need the decimals. Okay, the point being our debits should match our credits. So I've got 24171 in debits matching 24171 in credits. So I'm happy. Your balance sheet columns must balance. That's your first check. All right, let's go down and enter our income statements. Oops. Okay, in these 2 columns. So get rid of my balance sheet. Now I've got 2 statements. So I've got an income statement separate to a comprehensive income statement. Okay, so if you've got 2 statements, you've got 2 statements to enter. If your company puts them into the 1 statement, you've got the 1 statement to enter. Either way, you still got the same info which has to be entered. So let's get rid of that line. I only like to leave 1 line between the categories. All right, revenue. So let's go to my income statement first of all. So don't enter in headings. This is an item that's got a figure attached to it. Okay, but if you've got revenue as a heading, don't enter the heading, just enter the items of revenue. So I've just got 1 item of revenue. That's nice and easy for me. Now, I might have other items of other revenue, and I do here. And I can tell, so just take the time to have a look at your statement and understand it. All positive items on this statement for me, for Wesfarmers, how they represent things, are revenue. So that's revenue. That's revenue. Other income. Share of profits is revenue. I know that's a total, so don't include totals and headings in your trial balance. That's a total. Finance cost is an expense because it's bracketed. These are all expenses. So it's this is an expense, the 175. So is the income tax expense, that's an expense. This is the total, so I'm not going to put that in. And then I've got a number of discontinued operation items. So these are all positive items. So these are all items of revenue for me. They're positive. So I want to include them all under my revenue. This is a total. This is a total. Okay, so anywhere I've got a positive item. So I'm going to start up here. That's 1. My next one is other income. Then share of net profits. So let's start. Copy that across. Paste it here. Get rid of the bolding. Where's my next item? This is these 2 amounts. I'll copy those over. Get rid of the bolding and get rid of the note numbers. Now let me do, so I have a debit column and a credit column. They're positive income items, so they're not bracketed, so they're credits. My bracketed numbers are debits. Remember, expenses are debits, they decrease equity. Revenue is credit, increases equity. So all of my positive figures are going in the credit column. So make sure you understand these key concepts. So 27,920 is going to be entered into the credit column for my income statement. So credit column for revenue, 27,920. My other income amount was 239 and my share of net profits was 229, both credits. That's those 2 there. All right, keep going down. That's a total, that's a total. That's an expense. That's a total. That's an expense. Okay, so it was these 4 items for the most recent year that were also revenue. Pop them in here. Get rid of the bolding. Get rid of the note numbers that copied across. If you can't copy, you have to type them, sorry. And enter those figures in. Okay, I'm pretty sure that's all of the items of revenue for me. Yep, because I've then got to, if I go right down, this is my final profit figure. That's the figure that my statement of comprehensive income is going to start from. So get down to that figure. Make sure you classify everything up to that figure. And I'll show you how to do your comprehensive income items next. Okay, so they're all my items of revenue. Let's delete that. Now let's go to my expenses. So everywhere I've got brackets are my expense items. So start here. This is my first lot. I don't have impairment expenses for this year, so I have to make sure I get rid of that line. And I copy and paste it in. I'll just copy this up and delete that one. Okay. Get rid of the bolding. Go through and get rid of the note numbers that got carried across. Okay. Now my expenses are all negatives, which means they're debits. So I'm going to enter all of these figures in now in the debit column of my income statements. So debit column starting from raw materials. I'm using my nice things. I don't enter them as negatives, remember? No negatives in your trial balance. If we see negatives, it means you should have moved it to the other column. We've only got debits and credits. We're just showing the nature of each of these items. Okay, so that's my expenses that entered. I've entered those. Here's another one, finance costs, and then income tax expense. Copy that. Finance costs and income tax expense. 2 more expenses. So in the debit column they go. 175 and 859 for the most recent year. What other expenses? I think that's it. The rest were revenue right up till, so that's a total, and that's my profit line. So I'm happy I've classified everything. Now I can check whether it's a check, because we know what the profit is, 5510, so let's go and check if our profit really is that. So I'm just going to go sum that first, sum all their revenue. There's my figure here, just highlight it for now so I don't forget it, to delete it. Sum all of my expenses, and let's take the difference, equals that minus that. 5510. So I'm pretty confident I've entered these in the right columns and that I've included everything. All right, so let's get rid of these two. We don't want anything in there. Actually get rid of the colour off that and get rid of the colour off that because I actually need that line in there. Oh, I managed to fluke it. All right, insert a few more. So right click, insert, and then Control Y for a little while. Give me a few more lines. Control Y just repeats the last action that we've done. It's a shortcut key. All right, now we have to go to my comprehensive income statement. So I'll finish with my profit and loss. Let's go to my statement of comprehensive income. So it should start with the profit from the profit and loss if your company splits your income statements into 2 statements, which Wes Farmers does. Now, you have to have a look again. We don't want to put headings in. This is a heading, this is a heading, this is another heading. We just want to put items in, and just items that have numbers in, okay? There's no point putting a 0 number in. Look, you can include a 0 number in, it doesn't matter. I'm just going to put items that actually have, because we're only doing the most recent year, so I'm just going to put items that actually have a number attached to it. So I've got one item here, and it's a positive figure, so it's going to go in the credit column, okay? So it's comprehensive income, positive, credit, heading, item, that's a positive figure, that will go in the credit column, that's a positive figure, that will go in the credit column. That's another item, it's negatives, it's going to go in the debit column. Same as these 2 figures, they're going to go in the debit column because they're negatives, and then the tax effect is a positive, that will go in the credit column. Heading, don't include those. This one is an item, it's a negative, so it's going to go in the debit column. And that's it, then I have $38 million worth of outgoings of comprehensive loss for the year. And then I can check that that actually equals my total comprehensive income of 5472. So I'll show you how to do that soon, but let's just go and enter all of these items for me. So first of all, this one, Now you can, some students choose to put all the positive ones first, so they'll put this one, this one, this one, this one. I'm not going to do that in this case because other items of comprehensive income usually aren't that many, so I'm just going to list them as they are. It doesn't really matter for entering your comprehensive income items. So put that one in first. That's my first one. Get rid of the bolding. And it goes still in the income statement columns. It was positive, so it goes in as a credit. My next items were all of these. I'll copy those. Put them in here. Get rid of the bolding. Now, some were positive and some were negative. So where they're positive, they're going to go into my credit column. So the unrealised gains was positive, put them in the credit. Now the next ones, these ones here, are negative, so don't enter them as negatives, just recognise that that's telling you it's a debit, it's an expense, it's an outgoing. The tax effect is a positive, so it needs to go on the credit column. So you can make sure you're getting them right. Again, I only have one more item of comprehensive income, which is that one. And it's -1. It's going to go on the debit column. So don't enter it as a negative, just recognise that a negative means it's a debit. Okay, so I can check again. Let's just sum this column and sum this column. And then do this, so equals the sum of that minus the sum of this. And it's -38. Does that match my total comprehensive income? So my other comprehensive income total. So my other comprehensive income, other CI total of -38. Yes, it does. So I'm fairly confident I've done those correctly. Get rid of those temporary checks. You don't want to include them in your trial balance. Okay, that's all of the items of my income statement and comprehensive income statement entered. Oh, I put too many extra lines in. Oops. Delete. And delete those too. You don't want to enter anything else. That's it. Don't do anything else. You've completed entering your balance sheet items and your income statement items or income statements. Now, when we check the totals, these should not balance. They should be out by your profit figure. So I can see that in this year I've got bigger credits in my credit column than I have bigger debit, than the smaller debits. So I know I'm going to have a profit. Let's take the difference, equals the difference. So 5472 should be my total CI, my total comprehensive income, and it is. My total is 5472, okay? That's my total comprehensive income for the year. So I'm fairly confident I've entered everything correctly. Now's the easy part. Now we get to do our actual trial balance, okay? We've actually included all of our assets, liabilities, equity, revenues and expenses, and other comprehensive income items, because Wes Farmers had some. Okay, so now we've manually entered those. Now we can just go through and link. Equals. Oops, wrong column. Equals here, and I'm just going to drag it down. Oh, mine. So I'm in the trial balance column now. Your trial balance columns must be linked or must have a formula in them. So liabilities are credit, so let's link those. So nice and easy to link. Love linking. Equity, there's 1 on the credit column and there's 3 on the debit column. So literally just linking. All right, my revenues and credit column of the income statement. So link that down. Just link everything to start with. Just link it. You're linking the whole lot. This is a nice easy part. You've already entered everything. What's this? Okay, so now I'm only going to focus on these 3 now. So I'm going to double click this column. Whoops. Double clicking the column makes it open the cells to the widest entry, and because Martin's got these notes down here, it opens it too wide. So I'll just open it to about there so you can actually see the items. Okay, so focusing now on just the trial balance columns. Let's just do a trial of the balances. We can already see our credits are bigger than our debits, and they should be because we should be out exactly by our profit figure. So let's do another double check. Equals this minus this, so credits minus debits. And I'm right, I'm out exactly by my profit figure, which is what I want it to be. Now, the reason that I'm out is, remember we went through the closing process as part of the lectures, and Martin also puts it in the study guide. Now, the closing process closes off temporary accounts to equity. So when your firm prepared its financial statements, it has already completed the closing process, which means these accounts, the revenues and expenses and other comprehensive income items, don't exist anymore. They've been closed off to equity, okay? So they've been closed off to some of these 4 items, and we'll find out which ones exactly already. We've now gone ahead and included them again in our trial balance, so we've double counted them. So of course we're going to be out by the double counting, the profit figure, okay? Or the total comprehensive income figure. So what we have to do is to show our marker that we understand, so the assignment's asked us to enter the revenues and expenses and other comprehensive income. So that's good, so we've done that. But to show our marker that we understand the closing process and that our companies have already closed their temporary accounts off to equity, we will go and unclose them or undouble count, get rid of the double counting that we've just done by including them here again in our trial balance. Okay, so basically we're going to take off the revenue and add back the expenses, which is the opposite of what would have been done when they closed it. All right, so we don't know where the profit's been closed off to. We have to go and have a look at our statement of changes in equity. So first of all, remember that your profit figure is the 5510. That's where your company is closing off their revenues and expenses to. And remember your comprehensive income items is 38. Now they'll probably close these items off just different accounts. You might actually have to look for those individually. This one should be straightforward. There should just be one figure for profit that you're looking for. So let's go and do that one first and see where they've closed profit off to. So go to your statement of changes in equity. So for me that is here for the most recent year. So you have to scroll right down. Okay, so for the make sure that you're looking at it. So for me, the 2019 year is this bottom half, the most recent year, the way that Wesfarmers presents it. So make sure you're looking at the right year. Okay, I've had students, oh, I can't find this where it's closed up to, and it's because they were looking at the wrong year. So make sure, again, you're getting to know your financial statements and how to read them. So I know how to read Wesfarmers, put a lot of time into Wesfarmers, and you need to do that for your company. And I can see that they close they use each of their items of equity as a column. So if I go back to my balance sheet and just show you what I'm looking at. So we had these 4 items of equity, right? So they've got issued capital, so there's going to be a column in my statement of changes in equity for that. Then they've got reserved shares, so that'll probably be another column. Accumulated losses, retained earnings, that'll probably be another column. And then they've just lumped all of their reserves into one account here. But I'm pretty sure in my statement of changes in equity, they split this up into a number of different reserves. So they show me how that 5549 balance is actually made up across those different reserves. So I'm going to look out for these as columns in my statement of changes in equity. So I can see there's issued capital, there's reserved shares, there's my retained earnings, accumulated losses this year, and here's 3 different reserves that they've grouped in the balance sheet as one. Okay, so I'm going to look in each of these columns to see where they've closed my profit and my comprehensive income items off to. So I can see net profit for the year. So I'm looking at these items for my most recent year. So here's my 5510. So what column is that being closed off to? That's been closed off to my retained earnings or accumulated losses equity item. So I can go and deduct my revenue and add back my expenses for the 5510 to my retained earnings or accumulated losses equity item. So let's go and do that. So I can see my company has closed off its losses to my to the accumulated, so it's revenue and expenses. It's closed off its revenues and expenses to this equity item here. So I have to take away the revenue. So take away, let's go sum of all of these items and add back the sum of all of my expenses. So that's what adds to that 5510. Okay, now when I do that, I can see that I've actually got a negative here. So I'm going to get rid of that. Oh, we'll do that later. Just leave it at that for now. But we don't want negative, so I'll show you how to get rid of that later. We'll just see where our comprehensive income is closed off to, reverse that process. So we remove the double counting that we've just done by adding these items back into our trial balance. And then once we make sure our trial balance actually balances, then we will go through and fix all of our negatives. Okay, so we've reversed the closing process for our profit. Let's go back to our statement and change the equity. Now let's have a look. So we're going to have to look at, I can't see where there's a nice neat, oh yes, I can see where there's a nice neat 38 figure. So here's my 38 of other CI. So it looks like these are the items here that are of my other CI. These are all transactions with shareholders, so I don't need to worry about those. I'm just reversing, because I know closing off temporary accounts is just my profit and my other comprehensive income. That's just these items. So I've accounted for my profit in the accumulated losses, retained earnings. Now I've got these items. So I've got 14. Then they have lumped all of my cash flow hedges into one, which is nice and easy for me. And there's that one remeasurement loss on defined benefit plan. So if I have a look, I had the 14. I remember the 14 figure. That was this figure here. Okay, so that 14, where did they close that 14 off to? They closed it off to, here's the 14 figure. They closed it off to other reserves. So it's in my reserves column. So I need to go and reverse it from that. So here's my reserves. And I need to go and take away, because it's a credit, my 14. Okay, so that's where the first one goes to. Now I'm going to see where they've closed all of these items off to. Now, because these ones all add up to the negative 51, and then this one is negative 1 on its own. So they've closed off all of those cash flow hedge items to my hedging reserve, which again is included in the reserves figure. Okay. And then the last one, the remeasurement loss and defined benefit plan, has been closed off to retained earnings. So that's a debit, so I'll have to add that back. So, okay, so all of these items were closed off to reserves, so I have to minus anything that's a positive, minus, and add back the expenses, plus. Okay, well that's all of those items covered. Now I have to make sure that this one was to retained earnings. In here I also, now it's a debit, so I need to add back the debit because I'm reversing it. Okay, now I've got a negative figure here, so I'm going to literally just switch it. So remember, a negative in any column just means it's the other. It should be in the other column. So if you've got a negative, you can simply just cut it, put a negative in front of it in the other column, and it will solve your issue. So this one's telling me it's actually supposed to be a credit. All right, so before the closing process, before we closed items off to equity, it was actually a credit. So to reverse my negative debit, which is actually a credit, I'm going to Control X, which cuts it. And I'm then going to paste it in here. So Control V, paste it, put brackets around it, put a negative in front of it. Okay, so that just converts it to a positive. All right. Okay. And it doesn't balance. This is good. So this is what I really want you to think about. So in every other year, Wes Farmers has made a profit. So my logic of, so if you've made a profit, so adding back that closing process means that you have to, so you made a profit, when they close it off, revenues increase equity and expenses decrease equity. So I've got to make sure, so this year we've had accumulated losses. So essentially I've done opposite. I've reversed my mathematical signs. The reason I know that is because I can see this is double my profit figure. So I immediately know in my brain my mathematical signs are the wrong way. I'll just show you this divided by 2 is 5472. So if you see that you're still out by your profit figure, it just means reverse your mathematical signs essentially. So you have to really sit down and think about that closing process and make sure you're reversing it in the right way. So obviously I didn't. So instead of, I'll just show you. Instead of a negative here, it should be a positive. Instead of a positive here, it should be a negative. And again here, positive, it should be a negative. Which means I need to get rid of it, over to the other side. Delete that, equals, and paste that in there. And do the same thing with this. So I need to actually, I'm going to just, so it should be this figure. And what I'm going to do is equals the sum of all of my revenue items minus the sum of all of my expense items. Oops, don't accidentally forget. No, that should be right. Okay, now I'm out by 1. So it'll be this baby. So did I enter that correctly? Let me just go and check. It's -1. Oh, I know why. Yes, I did. Whoops. So I accidentally closed that off, or showed that I closed it off to my reserves just then. It's in retained earnings already. So I need to take it out of my reserves. I've already closed it off in here. This is it here, C68. But I also included C68 here. It should be only to C67. So I want to exclude that one. I've already accounted for that. That one, my company closed that particular item off to its accumulated losses, not its reserves. And I'm doing the reserves right now. So now, see how this serves as a really good check to just help you balance it? You can see that, you know, you might have to have a few goes to get it right. Even I'm doing this and I'm still having to correct myself. But luckily I'm using checks, so it helps me. So keep that check in. So you want that check to be 0 because you do want your trial balances to balance. Okay, so essentially now I'm just going to explain through the closing process again. Normally your retained earnings will be credits. Okay, mine are actually debits. And again, normally your reserves should be credits because again, you like these things to increase your equity, so they should be credits. So when you're doing the reversing, excuse me, when you're doing the reversing process with credits, so revenue increases equity. So when you've got the credit, when they would have closed it, would have increased it. So you have to take the revenue away. So that's normally how I do it in every other year when I show it. Because Wesfarmers normally has credits here. In this year though, they've got debits. So you have to reverse that mathematical sign. So we're starting with a debit. So we will have to add back that revenue and decrease the expenses because it's doing the opposite to that debit equity item that it would if it was a credit. So again, you may have to reverse your mathematical signs. And you can easily see that by if you're out by double the amount of your profit, you know you need to reverse your mathematical signs like I did. And again, it showed me I was out by 1 and I said, why am I out by 1? And then I remembered I accidentally closed off all of these twice. I reversed them out of reserves and I also reversed them out of here, and that was wrong. They had to be, my company closed them off to here. So I just got them out of that. So having these checks in place helps you to get it right. And that's what you want. So that's it. That's me finishing a completed trial balance. So I entered my balance sheet items in the balance sheet columns. I entered my income statement items in the income statement columns. Then I linked to the trial balance columns. Then I had to go and find where all of my temporary accounts had been closed off to by my company. And I did that using the statement of changes in equity to have a look where they were all closed off to see which items of equity I actually had to adjust for. And I actually had to adjust for in these 2 items. All right, so that's the example that I'm providing for you. So I'll put that on Moodle, make that available as well. And you can see when I had negatives, I had to reverse the negatives to get them to be in the other column. So if you have any negatives in your trial balance, that's not right. It just means if it's a negative debit, it should be a credit, and if it's a negative credit, it should be a debit. So just reverse it. So you simply just cut that item out and put it in the other column with a little negative number in front of it. So equals negative and then whatever. Control V for pasting it in. Okay, we don't want that in. Okay, so that's a completed trial balance. Now remember, once you do that, you then have to go and complete the written component. So that's not all, that's not the only thing that you have to complete for this step of the assignment. Once you've successfully completed your trial balance, your debit credit figures should be the same, they should balance like I've just shown you. Then you have to do this written component. So make sure you sit back, you reflect on what you've just completed, discuss with others, and tell us how the firm's financials link together, include insights, what you gained, what you did not gain, and so forth from completing this. So please allow up to about 5 hours to complete step 5. So I've been able to talk you through the whole process of the technical component in just under an hour. So you'll just need to spend the next couple hours writing, so completing yours and writing about it also in your Word document for step 5. So happy trial balancing, and I hope that it works out for you and that you learn lots from this section. Bye for now.